On the morning of Friday, June 12, 2026, the scale of a single market debut sent a shockwave through the global financial system. SpaceX priced its public offering at $135 per share, offering over 555 million shares. That math resulted in a $75 billion capital raise. It instantly catapulted the company into the top 10 most valuable entities, carrying a valuation just under $1.8 trillion. This single trading day proves that space exploration has matured from a speculative venture into a primary driver of global finance. To understand how massive that is, we have to look at the previous record holder. In 2019, Saudi Aramco went public, raising $29.4 billion. SpaceX's $75 billion debut pulls in over 2.5 times the capital of Aramco's previous record. And at $1.8 trillion, it's worth more than established corporate titans like Walmart and Meta. It even carries a higher valuation than Musk's own automaker, Tesla. By pulling in this much capital so quickly, the IPO permanently reorders the hierarchy of the world's most powerful corporations. Back in 2002, when SpaceX was founded, a private space venture was widely considered a guaranteed way to lose a fortune. The failure rate was staggeringly high. The company faced severe existential threats in its early days, burning through cash just trying to prove that a private team could successfully reach orbit at all. But they eventually hit a crucial technological turning point. By landing and reusing their booster rockets, you can actually see the scorch marks from re-entry here, they solved the biggest structural problem in aerospace. Throwing away a rocket after one use is like throwing away a 747 after a single flight. By making the hardware reusable, they drastically slashed the cost of reaching space, proving to their private backers that the math actually worked. Remaining private for 24 years allowed them to quietly build a monopoly. They didn't have to face the intense quarter-by-quarter scrutiny of the public stock market while developing their technology. The $1.8 trillion valuation is the direct result of a 20-year monopoly on affordable spaceflight, which brings us back to the mechanics of the 2026 public offering itself. The way this IPO was structured was aggressively engineered to maximize cash flow. When a company goes public, it uses underwriters, basically large investment banks that act as financial architects, controlling exactly how and when shares flow into the open market. This shows how shares are distributed. The underwriters secured an option to purchase nearly 83 million extra shares on top of the base offering. If fully exercised, it pushes the total cash infusion from $75 billion to $86 billion. They also made the strategic choice to trade under a highly recognizable, dedicated ticker symbol, SPCX. And rather than restricting themselves to the primary NASDAQ exchange, they established a parallel listing on NASDAQ Texas, broadening their immediate market footprint. Every single one of these complex financial levers was designed to pull maximum capital out of a market that has been hungry for a piece of this company for over 20 years. But beyond the corporate balance sheet, this liquidity event completely resets the personal financial standing of the company's founder. By publicly pricing a $1.8 trillion asset, the market takes a massive chunk of previously private wealth and assigns it a hard, undeniable dollar value. And the math is clear. This specific offering generates the exact capital required to propel Elon Musk past the trillionaire threshold. To put that in perspective, an individual holding a net worth of $1 trillion is a milestone that has never been reached in recorded human history. The massive scale of modern deep tech corporations has reached a point where individual executive wealth now directly rivals the total gross domestic product of entire nations. Zooming out from the individual level, the debut of SPCX forces a macro shift across the entire global economy. For decades, the top tier of the stock market was exclusively controlled by massive software platforms, sprawling retail chains, and fossil fuel conglomerates. Right now, heavy aerospace engineering and off-world infrastructure are taking their place as foundational pillars of public equity. For the first time, everyday retail investors can open their brokerage apps and purchase a literal, measurable stake in an expanding space empire. This offering transitions space exploration from private hands to the public markets, establishing a new foundation for the space economy.